Good evening. So I think my first comment would be both Anuj and Jaideep should get more airtime from the next meeting, which means they should grow so big that we should be the third to present. So this is the precedent that they said I should think so. So let me use the opportunity to set some targets for them as well. But interestingly, this business is a very simple business, and I have been interacting with, I guess, almost everyone in this room at some point or the other. So I was thinking to myself, what really drives this business? What gets it to a different direction? So there's some 5-6 themes I would like to share with you. One is, don't chase growth, but don't stop chasing recovery. So you have to chase, but don't chase growth. Ensure that you chase recovery at all point of time. I think the second simple fundamental, don't take relationships for granted. Be it OEMs, be it dealers, be it customers, be it employees, whosoever. I don't think we should take relationships for granted. I think third is, please do not innovate in this business unnecessarily and get complicated. Keep it as simple as you can. Keep it so simple that you must all the time almost fear that somebody else can also copy. But don't worry. I think the next is, however you may invest in technology and do whatever you want, don't stop penetrating and going closer to customer. You shouldn't do that at all, because last mile connectivity is the success story of this business. I think the next is, don't stop learning. You should almost every day know little more than what you knew yesterday. If the day you do not know something more than yesterday, I think there is something to worry about. For sure there is something to worry about. I think these are the very, very basic fundamentals of this business, and I think if we do this right, I think we will always have less to explain and more to celebrate. I mean, I would think more than 4 quarters. After all, what's our role? We are only an enabler. I don't think we generate business. We are enablers. At the end of the day, vehicles and tractors and factories and everything will have to produce and sell, and we will help them sell. And therefore, I don't think I will have an answer if somebody was to say, why aren't you growing? I mean, that's already known to everybody. If somebody is degrowing at 35%, where am I going to grow? In fact, if I grow against all those odds, you must rather ask a question, what are the wrong things you're doing? So I don't think we are going to ever come and tell you that, oh, even if everyone else grows, I'm going to do something very different. Right? But in order to still grow, what are we doing? And that's where comes the element of relationship. Now, we have something like 3.5–4 million customers that we have worked with, and we keep saying about it almost all the time. I think these are times to really test that relationship, that is the customer still willing to use you for his financial needs? Is he willing to refer to you more customer from the villages where he lives in? And therefore, even though you are not generating the sale, do you come to know of it before anybody else comes to know? And that is one growth direction. Today, if a dealer sells 100 vehicles, I get 30 vehicles to finance. How can I know before the dealer sells that he is going to sell 100 vehicles, and instead of 30, therefore, can I get 40? So it will be a market share increase that's possible, but you can't expand the market to say, oh, because of me, you will grow from 100 to 120. Some marginal expansions will happen. Because at the end of the day, it's also important to believe that a financial intermediary, if he cannot take the OEMs or a dealer to a new market, then you are going to compete where there is almost everyone out there. Either you will sacrifice on quality or you will sacrifice on margin. Then what's a great idea of this penetration? So the penetration must be your strategic differentiator, which will tell the dealer, if you work with me, I give you so many more villages. If you work with me, I give you so many more customers whom I already know. And therefore, am I not different from others? I think that's what will ensure that you remain in that growth trajectory. And as I said, don't chase growth. So therefore, these are difficult times. I don't think we want to come under any pressure and say, oh, let's increase the LTV to 95% and temporarily grow through that. And then when the market starts improving, we can be better off. Or say different things like, so what if the dealer is offering 10%, 15% discount, let's pre-discount price, let's finance. After all, after 6 months, the discount will vanish and then the market will take care of itself. I don't think we want to have that approach. So if you look at what have we done, we've said don't increase the LTV, so what if the volumes are low? Nothing wrong. I mean, I'm not able to really ever appreciate too much if somebody says, why aren't you growing 20%? I still do 500,000 car. I still lend 25,000 crore. If it can produce the same size of profit that a 20% business growth produced, so what if I don't grow 20% if I still make all that money? So I think there are times where you will have to work on your efficiencies and make your money rather than just look at absolute volume to be the only way to grow businesses. And these are the testing times. We have gone through them in the last 3 or 4 quarters. I mean, we were asked several questions in the 3rd quarter, and we believe to have explained, but I'm reasonably sure not everybody accepted our explanation, right? And one of the questions was, in fact, 2 questions, just about after the post-election, one question was, every 5 years this election comes, why it only affects you this year? That was one question that was asked. And then in the 3rd quarter, the question that was asked was, everybody else is not suffering so much as you are suffering. Believe in me, that's a question made us feel we are unique. While that question was addressed to us from a pressurizing position or from a negative approach to say that you seem to be suffering more than everybody else, but believe in me, that was a strategic eye-opener for us to further believe that we are unique and different from others. And then you look back in history, you will find almost every time we have grown when nobody else has grown, and therefore we suffered when nobody else was suffering. And maybe therefore the truth is, we will be better than everybody else. When others will struggle, maybe we will be growing. Now, it's not a commitment, it's an expectation, right? But I still believe very strongly that I don't think we have problems on the asset side. I don't think, let's imagine that every sales pickup, tractor sales once again does not go back to growth, but it just flattens out once again from a degrowth story. Just imagine automobiles becomes flat and not grow. No issues. Look at all the car manufacturers who have set up dealerships already. I mean, you go now into semi-urban rural market and you will see Ford and Toyota showrooms, which were not there 5 years back, 4 years back. But unfortunately, not enough volumes get transacted because the market is a little dull. But will it be like this forever? I mean, I can tell you, you and I may foolishly invest sometime somewhere, but at the rural or a semi-urban level, a dealer will never put in 2-3 crores unless he is able to see some future. He will never put. And if he has put in already 2-3 crores of rupees, he has his pulse in hand and he knows this is likely to happen. And that is our strategic preparedness. When we open 200 branches, 250 branches in less than 12 months' time, good news for us is you open a branch, it can be busy with recovery. And recovery is the best way to learn this business. And then when the market returns back to growth, these branches can deliver business. That's the power of this business, that you're locally there to be able to capitalize on all that is happening. So if you look at in this quarter, and when the question was posed to us, why are you suffering when nobody else is? And the explanations we gave you was, there are some delays in cash flow. We knew it at local level that the crop is out, but the money is not. And that's what we explained last time. And some of those corrections has what flown into this quarter. So if you ask me, oh, has everything now changed in rural? Is fundamental substantially changed? Is this the new normal from today? I want to tell you the answer is no. It is not a new normal. It is some corrections of the past and some outcome of the efforts. And I don't want to tell you that next 12 months you will see every quarter this is going to be the true story. But the true story is that we have covered 61% of our NPA already. We are left with 40% to cover. We have only 2 jobs in hand. Make sure that no new contract moves into NPA. Create a wall by which you at least collect 1 installment every month to make sure that he doesn't progress into next. And then the available customer, the 40%, you are on a better wicket now to decide whether you want to repossess these vehicles or work with the customer and collect your money. Because these are the ones where the collateral will protect your principal. There was a question posed to us, why aren't you repossessing vehicles? And if you recall my answer, I said it's a very, very scientific decision on the basis that what will you get if you sell the vehicle, if you're going to get loss? What's the point? You're not going to vacate the market. Why do you take temporary actions? So one another fundamental of this business is, please act, do not react. This has been learned by us the hard way. Invariably, I see when something goes wrong, you react to that and say, take some shortcut decisions. But these are businesses where you need to know to act and not react. And we did exactly this. We did not vacate a single market out from there. We did not foolishly repossess vehicle and cut loss from the market. We would not be used by anybody if that's what we were to do. We consciously stay put in that market, and we got benefit of continuing in that market. So I think we very strongly think that when growth returns, we are fully ready to capitalize on that. Even in this year, we have added something like 1,000 people. So we are 18,000 people in the system. We have added 200-300 branches. We have ensured that relationship with every manufacturer is in place. I think no sooner the growth returns, you will not have time to prepare yourself. So we have built all the required resources to be able to capitalize when the growth returns. But fundamentally, even in this year, until we start, the first signal of growth returning will be known when the discounts in the market stop. The day you go to dealership and he says, don't negotiate any discount, you should know the growth has returned. I think the second signal you will get when the growth returns is there is a demand for second-hand vehicle going up and people are willing to pay a price. You must know the growth has returned. The third reasons, or the third indicator of growth returning would be when the customer is not negotiating for higher quantum of finance. If today when the customer says, give me 90% loan or a 95% loan, you must know that he is not willing to invest because he is not able to see volumes. The day he says, here is my 25%, please give me a loan urgently, you must know the growth has returned. And the fourth is when customer calls up and says, I will not pay penal interest if you don't collect my installment, you must know the growth has returned. I think if these indicators are visible, we will ensure that we get benefit of that growth. And that's what we are preparing ourselves for. But then what differentiates us from everybody else is our penetration, our long experience in that market, our substantially very high level of relationship at every level there, and therefore when he gets money, we are the first to get it. And that's what was demonstrated in this quarter, that when we chase for money day after day, month after month, when he gets money in his hand first, we get the benefit of that money. And which is why I'm saying the last mile connectivity for this business is absolutely essential. If somebody explains to say that we are technologically fully connected and we know what's happening out there, of course you will know it from a knowledge perspective, but from an action point of view, you need to be locally present there. I think that guides this business. So our preparedness is wait and capitalize for growth as it returns. Focus on recovery, keep the focus on recovery continuing for next 2 quarters if necessary or maybe more. Be close to every dealer out there to know what's happening at the local level in terms of discounts and demand. And ensure that you continue to penetrate deeper, adding more branches. But finally, use your existing customer as your large fleet of people out there on the market. I mean, you just look at that, if 3 million, 3.5 million, 4 million customer of ours, if all of them can just give me 1 inquiry per year, I will still have 4 million inquiry to manage, which is larger than the total vehicle sales of this country. Is that the preparedness? That's where we are investing our money on. How to be in contact and in touch with the customer for him to be able to refer customers to us. And if that can happen, I think that's where the volume of business for us is. If you look at our uncovered portion of 40% on what, 2,100 crores gross NPA? Yeah. So you take 40% uncovered is only 800 crores, which was what our last year's provision was. And we have a collateral underlying for a value higher than that. So I don't think we have now a problem from the NPA perspective. Now the problem for us is how do you don't allow new cases to become NPA. So if we can just manage 1 recovery from every customer diligently, I think we have got a game in hand to play. After 4 quarters, I think the growth has returned to us. That's exciting for all of us. It's exciting for all our people across the country. And I think these sentiments will take us through for this year. We will not overdo anything. We will not be under pressure of any manufacturer for us to overdo anything. We understand what we need to do more prudently, but we will ensure that what we do is well understood by us and consciously done by us and not forced to be done by somebody to us. That's the approach we are going to take, and we believe that we have a role to play and we differentiate in this market when compared to anybody else. We believe commercial vehicle business will return. I was hearing some murmur wherever you travel saying, oh, commercial vehicle pickup is happening. I'm sure that must be one of your questions possibly. But I want to already answer you saying that it's not happening. I think because they thought that infrastructure will happen, coal movement will start, mining will commence, all of this is going to happen, and the discounts in commercial vehicle may vanish in next 1 quarter. Lot of them have bought vehicle thinking, let's take it when the discounts are available. But the load is still not there for vehicle to be enough viable. But for sure, all of this, when it unfolds, it will be the commercial vehicle which will show the first sign of improvement before any other vehicle can show. The contracting segment when it gets announced, coal movement when it starts, mining when it commences, road projects, take it by whatever means, or exports, or industrial output, take it whichever way one wants to. When all of this happens, it's the commercial vehicle segment which will first start reacting. And that will be the return of growth. And we are ready and we want to embark on that story. Last round, we made a silly mistake of entering the commercial vehicle segment at the fag end, because nobody could predict that India's story is going to go down that fast. And we got caught. Good news was we were small, so we could withdraw. The good news is we have not dismantled that team. We are still having all those experts still continuing with us, and we believe that we can take that business back to that growth story as it recommences. So I think that is what is going to really ensure that each of our segment, the growth will happen. In each of our segment or each of the geography, the growth will come. And from each of the geography, we'll make sure that the money that's out there is waiting to be collected. The good news is we meet customer, we meet assets. We don't lose either of them. Yes, if one of them is missing, act fast. If both are missing, just silently walk away from there. If both are there, don't too much worry about it. I think in our case, we see a larger percentage of both of them being there. And that's what gives us confidence that we can continue to keep growing in this direction. It'll take some time for us to get back to where we belong to. But the growth is returned. It will have this bumpy ride even this year. What used to be first half and second half seems to have become alternate quarters because of the stretched cash flow and the delayed cash flow. Right? But we know for sure that rural story will have to happen if India's story has to unfold. It's a question of how much patience you have, how long are you willing to wait in that geography, and how can you convince your team to continue in the same direction with which we have built this business. So I was just telling Dinesh, from 95 we started active operations of this business, and this year will be the 20th balance sheet that we will sign in terms of actual operation. So some quick numbers that we were looking for, we had 1 branch then and we have 1100 branches today. We were 5 crore or something like that as balance sheet, we have 40,000 crore balance sheet close to. Our net worth was 5 crore, we are 6,000 crores or whatever. So I think it's done well for us. So we've got into now the next phase of that growth. So when 10 years later we put these numbers, will it look the same way the first 10 years looked like? The hope is that, passion is that, drive is that, people are the same, penetration is our strategy. I think we believe that that's what will take us to that new market. I open you for all questions, whatever that you may have. I want to leave you with this thought that we believe that growth will return, but not in a hurry, nor are we in a hurry to chase that. But we will be there, we will have patience, we will not miss the opportunity, but when it returns, it will give us a longer play to play. Thank you so much. only two possibilities, right? Either I was very clear or I was totally confusing.
So this is Sunil Tirumalai from Credit Suisse. I had a couple of questions on the, an interesting trends in the value of asset finance that you report. It's gone up 7%, or that's what my numbers say, and the number of contracts is flat YOY. Has the ticket size gone up? The discounts definitely have not come down. So I just wanted to get your sense. I have a follow-up on that.
Ticket size has not gone up at 72% or something is our LTV, which continues to be that. I think the good news is many of the personal segment, like even Mahindra, XUVs and Scorpios, have started going into that market big time. So when you get those volumes, they are very high value items, right? So therefore, even the numbers, though they are flat, you got the benefit of high value products, and that is how the increases.
Plus, SME is also one.
Yeah, plus SME segment has come in. So it's a product mix change and it's not LTV change. In short, what we're trying to tell you is it's a product mix change and not an LTV change.
Okay, and just related to that, given that M&M sales are not really very strong, so which are the brands and what are the market shares that you're gaining for you to get these numbers?
Interesting thing for us is we are not 100% market share in any product. So it really doesn't bother if somebody sells less or somebody sells little more. What we have to make sure that what volumes for which we have created infrastructure we should not lose. And that pushes up the market share or sometimes brings down the market share. So let's take a branch here, and if I decide I have to do 50 vehicles from here, I shouldn't much bother, oh, M&M sales have come down by 5, what will happen? I have to do 50 vehicles. So in that particular situation, maybe your market share looks to be 2% more. So it's only a denominator effect. It's not, we have an ability, what's our capability to suddenly increase market share or suddenly bring down market share? We don't have switch on off methods. Who will want to use you if that's what you're going to do? But what we go and put pressure on the dealer and agree upon with him is you have to promise me a minimum volume for which I set up a branch. Yes, if the dealer is selling less than that, of course, then it's a problem there. And that's the reason we even got into multi-product. So please don't look at it at all from the point of view of, oh, have you gained substantial market share, so have you done something very different? Nothing. If they sell less and we still do the same number, market share goes up. If you do the same number and they sell little more, the market share looks to have come down.
Yes, and sorry, the last question is on the NPA recognition. What's the timeline you have in mind in terms of the migration from 150 to 90? You're not in a hurry for this year, but do you envisage an accelerated movement?
See, we are at 150 already, right? We are already at 150. So that way we have a benefit of 1 year in hand, maybe few days here and there that we may need to do. If we are exactly at 150, do we want to be a little less than 150 so that we are not caught on the borderline kind of a situation? There are some discussions that we are internally doing to say all new businesses should we start providing differently. So there will be different combinations that we will look at. Maybe we will start looking at different product lines where we may want to accelerate a little more than we are today. But very interesting thing about this business is when the business picks up, even collection becomes extremely good. Right? Because these are all earn and pay segment. So if the business is good, means collection will be good. But we will come back to all of you whenever we take the decisions very quickly. But at least currently we are not, very different from what was expected of us. We are already at 150 days. Right? So there is no pressure on us, but if we can be better than where we are, then we communicate very differently.
Good evening. Sharad here from Mikra. I just wanted to understand from you the segment-wise asset quality in your portfolio, and as a follow-up to that, what would be a risk perception internally across the various segments of your business?
Segment-wise. You wanted segment-wise asset quality?
Yes, sir.
I don't know whether we have it ready with you. Okay. So I can tell you our balance sheet breakup. I don't know. We don't normally share the segment-wise asset quality, because then you will start plotting numbers for the manufacturer. And, and I don't want to be answerable for it. But our balance sheet is about 18% tractors, 32% UVs and things like that, 30-odd% cars, 7-8% commercial vehicle, construction equipment, small LCV, etc. And about, I think 10% or so will be, 10-12% will be the pre-owned vehicle. What we have seen is the behavior of asset across geography is the same. So there is no exception to geography at this stage in terms of improvement or deterioration beyond. And the third is, you must know one thing for us is, we are 80% plus or maybe 90% of our customers are earn and pay segment. So it does not matter which product he is using. If he is not earning locally, he is not able to pay. So it's more based on the local economy rather than the product that he owns, because we are not on a fixed cash flow customer.
Yeah, sir. Kunal Shah from Edelweiss. So, in terms of the increase in yields which have been there quarter on quarter, okay, from Q3 to Q4, if you can just give a broad breakup as to how much would be, say, on account of penal interest collection, how much would be, say, on account of interest income reversals because of the improvement in the NPL trend, and how much would be, say, on account of, say, any kind of a tweaking in the lending rates in any of the product segment?
So let me start with the third one, that's easiest. There is no big increase in lending rate. So therefore it would have been caused by the other two, of which the penal interest will be more or less same as the previous year, maybe some 5-10% more than previous year. It will not be substantially higher. So it will normally be the benefit of or pressure out of income reversal. Dinesh, you want to?
Yeah. So from previous quarter, if you see, there is a 50 basis point increase, and of that 50 basis point, roughly around 15 basis point one can contribute towards the penal interest, and around 35 basis point on account of the income reversal, right back on account of the NPA reduction.
Okay. And sir, if you can just comment on any kind of an impact which this unseasonal rains can have on our business in any of the product segment.
So we are calling it a special rains, not unseasonal. Like special trains for holidays, it's a special rain which has come in holidays. But I don't know, and how much of this you will buy my argument also, I don't know. These kind of impacts are one very media-based impact. On the ground, will it be same as much as you and I read and understand? The answer could be no. Does it mean there is absolutely no impact? The answer is no for that either. So it has huge sentimental impact and little less cash flow impact. Because, we look at it from our point of view of how you're going to recover and whatever. You look at it from their point of view, how they are going to survive. Right? So they find alternate ways of living, and they survive this. So the sentiment impact is very high when this happens, but the adjustments are also equally fast. And therefore, we don't necessarily see that all this impact that we read and understand translate into everything going wrong and negative. And in some pockets, it will be terrible, which is, let's say that if they depend only on this. I mean, let me give you one classic example of Maharashtra. I'm sure you must have also read. Sugarcane crop is at its best possibly, but the price is low and the cash flows are not there. No, it's as bad as an untimely rain is, because both has the same cash flow effect. But will therefore nothing happen in these places? Of course, there will be a lot of activities which will happen. Things will temporarily get delayed. Aspirational purchases will go down and they come back. I think if you go back in history for last 20 years, 30 years, these kind of things would have happened every year somewhere or the other. It gets projected higher for us to either get worried or get ready to plan with. We have to decide what do we want to do. When we read this, do we want to plan or you want to get worried? And our belief is that you better plan, better understand the sentiments. Partner, some markets will react negative, you will have to go slow. Don't lend in this market for next 3 months. Will be one decision clearly. But I don't think we want to estimate that this is going to be too severe for us to, what next kind of a fear, no. But the impact is there, sentiments are weak. But in the next 3 to 6 months, let's imagine that a lot of infrastructure story gets announced in UP. Believe in me, they will forget that the wheat crop was bad. But if nothing gets done, and only some free concessions are given to say, oh, you are suffering, so take this money, I think they will continue to want to suffer. Our understanding is with elections coming round the corner in that state, etc., you will see some quick announcements happening on the infra front where the